So this evening we'll be working through chapter 23, and that is going to deal with personal property, bailment, and insurance. Again, when these are completed tonight, you'll have time to work on your LRS and other assignments as needed. So the basic outline for the chapter is going to be looking at personal property versus real property, acquiring ownership of real property, mislaid, lost, and abandoned property, bailment, and insurance. The learning objectives include understanding what is real property compared to what is personal property, and the three necessary elements for an effective gift. And we'll also look at property and look at how long property has to be lost or mislaid and what the difference is between the two. And then how does the finder of such property acquire the title to it? And what are the three different elements of bailment? And also, what is an insurable interest and when must an insurance interest exist? Real property is divided into property and personal property. Real property, sometimes called realty or real estate, consists of land and everything permanently attached to it. It includes the structures and anything permanently attached to those structures. Everything else is considered personal property or personality, and attorneys will sometimes refer to personal property as chattel, which is an old term under English common law that denotes any form of personal property. Personal property can be tangible or intangible. Tangible property such as a TV, any heavy construction equipment, or a car, basically it has physical substance. And then intangible property is always going to refer to some set of rights or interests that has no physical substance, such as your stocks and your bonds, patents, trademarks, copyrights, and also digital property are examples of what would be known as intangible property. Both are personal properties and they're real and can be owned by an individual person or some other entity such as an organization, corporation, and so on. And concurrent ownership does exist, and these types of concurrent ownerships will also be discussed when we get to the real property chapter, which is the next chapter. So we asked the question, so why is there a distinction between the two and why is it important? The distinction between real and personal property is important for several reasons. How property is taxed and what is required to transfer that property can be determined by the property and how it is classified, whether it is real or personal. When it comes to taxation, there are generally going to be different types of taxation depending on the type of property. Generally, each state will assess property taxes on real property, and that tax rate is based on the market value of real property and the various services that are provided by the city, state, and county in which that property is located. As you know, here in Anchorage, we do have property tax, but we have no sales tax. And that a lot of times is why our property taxes are so high, because there's not a supplemental form of income for the muni. Businesses often will also pay taxes on the personal property that the business owns or that they use or that they lease, including what could be their office or any farm equipment and supplies. Um, Often individuals must pay sales tax when they are purchasing personal property, depending on the location of where you're at. Again, Anchorage doesn't have a sales tax, but other munis such as Wasilla and the Kenai Borough, they are going to have a sales tax on everything. Another reason to distinguish between real property and personal property is how property is acquired or transferred. Personal property can be transferred with a minimum of formality, such as goods that can be sold on Craigslist or any garage sale, whereas real property generally is going to take a written sales contract, and a deed is going to have to be recorded with the state in order for that property to transfer. When looking at real property, um, sometimes real property can be turned into personal property by detaching it from the land. For instance, trees, bushes, and plants all growing on a piece of property are a part of the real property, but should the trees be cut down, it's possible that the wood could be sold for firewood, used for firewood. If it's a crop such as wheat, wheat would be harvested. As long as it's in the ground growing, it's considered real. But once it's harvested, it's considered personal property and could be sold. And conversely, personal property may be converted into real property by permanently attaching it to real property. Personal property that is affixed to real property in a permanent way, uh, such as tile that is installed into a house, then becomes known as a fixture and would remain um, as a part of the real property in the event that the property was sold. The most common way to acquire personal property is by purchasing it. And today, with being able to purchase virtually, it's often more easy to purchase items than it has been in the past and to maintain that ownership. Sometimes a person can become the owner of personal property simply by possessing it. And with that possession, the example could be that of a wild animal. For example, if you are out and about and there is a feral kitten somewhere and you're able to catch it and take it home and tame it, then you now become the proud owner of a cat by possession. Same thing if a hunter is out and they kill a deer, depending on the ownership of the land, it could be um, assumed that at the time that the kill is made, that the owner actually becomes the owner in possession unless there was a violation of an act of law that created the situation to where uh, he killed that deer. Production, also known as the fruit of our labors, is a means by which we also can acquire ownership of personal property. For instance, you have writers, investors, and manufacturers. Everything they produce, they own the rights to it. There could be a situation or a case where you have an individual that's been hired as a researcher to develop something. In those situations, the person that develops it would not have ownership rights because they were hired to do the work that created the material, whether it be um, physical material or intellectual type material. Another way to acquire ownership of something is by gift. Gifts usually require the transferring of ownership of real or personal property. A gift is normally um, a voluntary act or a voluntary transfer of property ownership. Um, in other words, no one, you are not buying it from somebody. I know there are some old wives' tales when it comes to like knives and things like that, that you're not supposed to give knives away because it's supposed to sever the relationship kind of thing. So therefore, oftentimes people will pay somebody a penny when they're gifted a knife just to deal with old wives' tales. Same thing with wallets, never giving a wallet that's empty because it'll always stay empty. Uh, Most people will put a dollar bill in a wallet if they give um, it to somebody um, so that it's not empty. Then they take that dollar bill and give it back to them um, because of the old wives' tale about giving an empty wallet and then also accepting a wallet that's empty. Normally, for things to be considered a gift, there are three elements that must be present. One is there is the donative intent of the part of the donor. In other words, the person giving it, there has to be intent. There has to be the delivery of the item to be gifted. And then there also has to be the acceptance by the donee. That's the one that's receiving the gift. Until all three of these elements are met, then in essence, there has not been um, a gift exchange. It's again, when giving gifts, it does include the delivery, the acceptance of gifts, and so on. When we look at um, gifts inter vivos and gifts causis mortis, they are very specific in their nature. The gifts inter vivos or gifts and gifts causis mortis often are gifts that are considered deathbed gifts, and it's made in contemplation of imminent death. Oftentimes you'll see this when individuals start relating to their family members what each person's going to get. Oftentimes it is done by way of a will, but there are times that if everyone's present and someone decides to start saying this is what each person gets, then oftentimes if there's not a will, then that may be um, acceptable depending on the state that you live in. For a gift, cautious mortis, uh, there are the three requirements discussed earlier, which is the donative, the delivery, and the acceptance. But it also has some additional rules. It doesn't become absolute until the donor actually dies from some contemplated event, and it's automatically revoked if the uh, donor does survive. So something to think about, that if someone's giving you something and it's in the will, um, then it doesn't become a reality until after the passing of that person. And if that person is seriously ill and all of a sudden recovers, then it does not exchange hand until that person actually passes at some point in the future. When we talk about ascension, that basically means that something is added. And ascension basically is going to occur when someone adds value to an item of personal property by the use of their labor or their materials. Generally, there's no dispute about who owns the property after the ascension occurs, especially if the ascension is accomplished with the owner's consent. If an improvement is made wrongfully without the permission of the owner retains title to the property and normally does not have to pay for the improvement. And when we get to the real property chapter, we'll look more at this. For example, if the neighbor doesn't know where the true property line is and they build a permanent structure on someone else's real property, and it's surveyed and it's realized that they built it on the neighbor's property, then the neighbor now owns that building. The individual that built it would have no right to it because it was built on the wrong property. Another example would be if you have someone that steals a truck, thinks they got away with it, goes out and puts, $1,000 tire on it, and the police recover it, then the owner of the truck would be able to keep the tires that are on the truck because it's their personal property. There are times when confusion could occur um, when you start commingling, which means mixing together of goods to such an extent that one person's personal property cannot be distinguished from another's personal property. And that's where um, this normally happens in what's known as fungible goods, such as grains, oil, and there are identical units available. Sometimes this could happen with farm where there's livestock. If two neighboring farmers, if the fence were to be broken and the um, livestock were to commingle together, unless each one of the livestock animals was branded by each farmer, then there could be some dispute as to who owns which one. And in the end, most likely, um, it's going to be whoever property the animal is on when it's discovered if it's unbranded. Same thing with granary. If you have multiple farmers and someone steals a bunch of stuff and then they put it into a common granary, um, same thing, there's no way to distinguish, so there could be um, some issues with the determining who was the owner. Um, and with confusion, if there is ever any intentional wrongful act that's involved, then the innocent party is ordinarily going to acquire the title to the whole um, of the property that's in question. When we start looking at the mislaid, lost, and abandoned property, um, it is going to depend on the definition of it and how things are seen when it comes into question. Property that has been voluntarily placed somewhere by an owner, then inadvertently forgets where they laid it is considered mislaid property. Um, the person that finds mislaid property does not obtain title to it, but instead the owner of the place where the property was mislaid becomes the caretaker of the property because it's highly like the true owner at some point in time will return for it once they realize where they put it. For example, if someone goes to the theater and while paying for, uh, say, their ticket, or they're at the concession stand and you set your iPhone down and you kind of forget it and leave it there, then that's mislaid property. The theater owner at that point, or management, is considered to be the caretaker of that and must take reasonable care of it for when you realize it and then you come back um, to find it and obtain it. So it's mislaid property, not lost or stolen. Lost property is when something has been involuntarily lost. The finder of the property can claim the title to it against the whole world, except for the true owner. If the true owner is identified and demands the lost property back, it must be returned. Um, but if a third party attempts to take possession of the lost property, then the finder will have a better title to um, that property and be able to keep it. For example, you're on a school campus and um, on your way back to your car or home or something, you find a gold bracelet or necklace um, that is just on the ground. You take it and you have it appraised, and based on the weight, you determine that the weight of it, and if there's any stones in it, then it has significant value. Then you would win because the property that you found was lost, and you would hold title to that property simply because it was lost and you found it, unless there were something to where the true owner was able to discover that you had it and that they could prove that they were the original owner and the true owner and that it was lost. And then you would need to surrender it back to the true owner. Um, and when we think about lost property and the true ownership of it, if the person finding the property fails to return it to the actual true owner, once the true owner has been identified, then the tort of conversion happens, and then that is when there is a wrongful taking of another person's property. An example of this is that Mike um, finds a bicycle on the sidewalk in the front of his house. He knows who the bicycle belongs to, and if he doesn't return the bicycle, then he could be liable for conversion. Um, then you have the estray statutes, and many states do have this, which is um, the statutes that encourage and facilitate the return of property to its true owner and reward the finder for honesty um, if the property remains unclaimed. So basically, if you find something and it's your responsibility to try to find the rightful owner and return it, and if it's unreturnable after a certain period of time, depending on the statutes, often it will come back to you and you get to maintain it with full ownership and so on. When it comes to abandoned property, this is property that has been discarded by a true owner who has no intention of ever reclaiming title to it. And if someone finds abandoned property, they acquire title to it, and it's good against the whole world, including the original owner, slightly different than mislaid or lost property when it's intentionally discarded. And I know we see it a lot of times in the movies about the police going through people's garbage that's at the end of their driveway, especially if they're looking for evidence of something. And of course, it's a little bit different, but it's the same concept that once something goes into the garbage, it's considered abandoned or discarded in such a way that the expectation is that the person that put it there is not going to come back out and get it um, and take it with them. When we look at bailments, many routine personal and business transactions are always going to include a bailment. And bailment is formed by the delivery of personal property without transfer of title by one person. This is where you have the bailor, and the other is the bailee. And usually a bailment is formed for a particular purpose. For instance, a loan, a lease, repair, transfer of property. And what distinguishes a bailment from a sale or a gift is that there is no passage of title or intent to um, transfer that title. And on completion of the purpose, then the bailee is obligated to return the bailed property in the same or better condition to the bailor or to the third person, or to dispose of it as directed. And most often these are um, instances where a contract is in place and must be followed to the letter of uh, the contract. For ordinary bailments, they're either ordinary or specified. There are three types of ordinary bailments, and they are distinguished according to which party receives benefit of the bailment. Um, the factors will dictate the rights and liabilities of the parties, and the courts will use it to determine the standard of care that is required on the bailee while they're in possession of that personal property. The bailment for sole benefit of the bailor, this is a gratuitous bailment, which means that there is no passing of money or other reasons for the situation to have been created, but it is eventually for the convenience and benefit of the bailor. So basically, the bailee is caring for the bailor's property as a favor. Therefore, the bailee owes only a slight duty of care and will likely only if that person that's caring for it is negligent in the taking care of the property, owe the bailor anything. When you have the bailment for the sole benefit of the bailee, this generally is a bailment that occurs when one person lends an item to another person for the bailee's convenience um, and benefit. Sometimes we can think of this as a neighbor borrowing something from another neighbor, say a lawnmower or a chainsaw or snowblower. Um, then that's where that comes in. And then you have the bailment for the mutual benefit of the bailee and the bailor. And this is kind of the most common of all the bailments, as it does involve some sort of compensation for storing or holding onto property while it's being serviced. And it is a contractual bailment, and it may be referred to as a bailment for hire or commercial bailment. And this type of bailment, then the bailee is going to owe duty to exercise a reasonable degree of care, and so on. When it comes to the rights of the bailee, certain rights are implicit within the bailment agreement, and generally the bailee has the right to take possession of the property and to use it to accomplish the purpose of the bailment. Um, to receive compensation unless otherwise agreed, and to limit their liability for the bailed goods. So these rights are presented with some limitations in varying degrees in all bailment transactions. Um, the right of possession. This is the hallmark of the bailment agreement, um, is that the bailee acquires the right to control and possess the property temporarily, and the bailee's right of possession permits the bailee to recover any damages from any third person that may cause damage or loss to the property. In addition, if the bail property is stolen, then the bailee does have a legal right to regain the possession of it. Right to use the bailed property. The extent to which the bailees can use property that's been entrusted to them depends in part on the terms of the bailment contract. When no provisions made, then the extent of use depends on how necessity uh, is in play for the goods that were borrowed or that are in bailment. Right of compensation. Uh, Except where there is a gratuitous bailment, then a bailee has the right to be compensated as provided for in the bailment agreement. The bailee also has the right to be reimbursed for any services rendered or cost incurred while keeping the bailed property. And that does apply also to the gratuitous bailment. To enforce the right of compensation, the bailee has the right to place a possessory lien on the bailed property until they have been fully compensated. And a lien on bail property is usually known as a bailee's lien or an artisan lien, as we've seen the artisan lien term in earlier chapters. And if the bailer refuses to pay or cannot pay in most states, then the bailee is entitled to foreclose on the lien and sell the property to recover any amount that would be owed that individual. Rights to limited liability and ordinary bailments, bailees have the right to limit their liability provided that both of the following are true, and the first being the limitations are called to the attention of the bailer. It is essential that the bailer be informed of the limitation in some way, and that can be verbally or in writing. And number two, that um, the limitations are not against public policy. Even when the bailor knows of the limitations, courts consider certain types of disclaimers of liability to be against public policy and therefore illegal. When it comes to the duties of the bailee's duties are based on a mixture of tort law and contract law and always include two basic responsibilities. The first being to take appropriate care of the property, and the second is to surrender the property back to the bailer or dispose of it in accordance to any of the bailor's instructions at the end of the bailment. Um, the duty of care involves the bailee exercising reasonable care in preserving the bailed properties. In determining what may constitute reasonable care in a bailment, the courts consider the type of bailment that was involved. Um, so whether it is a bailment for the sole benefit of the bailer, the bailee needs to exercise only a slight degree of care. If it's a mutual benefit um, bailment, then normally it's going to impose a reasonable care standard. And if it's for the sole benefit of the bailee, then the bailee must exercise um, great care. There is also the duty to return the bailed property at the end of the bailment. Um, Normally, the bailee must hand over the bailed property to the bailer or someone the bailer has designated for it to be returned to at the end of the use. Um, at some point, a bailee could be liable for any conversion if the goods that they have had in their possession become stolen, or they deliver it to a wrong person, or they let someone else use it during that time. Now, if the bailed property has been lost or it's been returned damaged, then the court is going to presume that the bailee was negligent, and then the bailer can um, collect damages on that property. Let's see. When bailments do exist, then there is going to be um, two other things involved, and that is going to be the bailor's duty to reveal any defect, um, and that translates into two basic rules. In a mutually beneficial bailment, then the bailer must notify the bailee if any defects exist, any hidden defects that the bailer knows of but may not be um, obvious, and they may not be discovered through a reasonable diligence and a proper inspection. In other words, it's for safety reasons a lot of times. In the bailment for the sole benefit of the bailee, then the bailer must notify the bailee of any known defects. And again, a lot of times that's more for safety and to prevent negligence um, in these situations. Warranty liability for defective goods. A bailer can also incur a warranty liability based on contract law for any injuries that are resulting from the bailment of defective articles. That's why it's always good to make sure if you're doing a bailment that um, the goods that are involved are in good repair, or if you know of any intricacies that are involved, then you share that information so that no one is injured in the use of the property, because it could come back onto you as the bailer. There are some special types of bailments that are common. Um, Oftentimes, this does involve businesses and the arrangements that they make of moving property from one location to another and other things. And these often are going to involve your common carriers. You may have hotel operators, warehouse companies. They're going to have a much higher duty of care than any normal baileys that are involved, but they may not be as subject to strict liabilities. Um, Carriers, warehouse companies, there are some extensive regulations under federal and state laws, as discussed in Article 7 of the UCC, um, as far as their duty of care when it's in their possession. Common carriers are publicly licensed transporters of goods or passengers on regular rates at set rates, on regular routes at set rates. They are legally bound to carry all passengers or freight as long as there is enough space. The fee is paid, and there are no reasonable grounds to refuse service. Common carriers different than private carriers, which operate transportation facilities only for a select clientele For example, um, AFF, Alaska Fast Freight, they are a common carrier, so they will transport for anyone, whereas your Walmart trucking fleet are only going to move merchandise around the country for Walmart, though they are considered a private carrier. Hotel operators at common law, they're strictly liable for the loss of any cash or property that the guests have brought their rooms. Today, the statutes continue to apply strict liability to hotel operators for any loss or damage to their guests' personal property. In many states, hotel operators can avoid strict liability by providing a safe in which the guest may place their valuables, and then the liability moves to um, the guest because they locked it up and they put in the new code for while they're there. And here is a graphic representation of the degree of care that is expected of a bailee. When we look at insurance, insurance becomes important when it deals with personal property ownership because it's there to protect against any loss. Most people, most businesses are always going to protect their property by purchasing insurance on it. We do see this on like homeowners insurance, auto insurance, and stuff like that. And you also now have travel insurance and so on. So insurance basically is known as a contract, um, commonly called a policy between the insurance company and the person being insured. Um, the insurer is promising basically to pay or give something to the insured or the beneficiary in the event that the insured is injured, dies, or sustains damage to property. So the damage must be the result from a particular stated contingency, again, such as an automobile accident, fire, theft, and in return, the insurer promises to pay for consideration what's known as a premium. This would be your monthly payment or annual payment if it's a house insurance policy. And basically, insurance is an agreement for transferring and allocating risk. And that's where we come up with the term of risk management because the the transfer of the risk is being transferred to another individual in order to um, mitigate anything that does come up. When we look at the insurable interest, oftentimes um, without there being something that's being insured, then um, the enforcement of an insurance contract can't happen. Um, so a transaction to purchase insurance coverage would have to be treated more or so as a wager when there's no insurable interest involved. When we think about something that we do as times come forward, we may think about life insurance. Life insurance basically is in regards to when a person may be uh, reasonably expected to expire, and then what would they want to have their life insured for at the time of their passing. Um, the insurable interest in this must exist at the time that the policy is obtained, and then the benefit may be monetary, or it may also be formed based on the relationship between the parties, whether it be by blood or affinity. When we think about the key person insurance, this is a type of life insurance that is obtained by an organization on the life of a person that is actually working for them. One of the companies that I worked for in the past, they carried a life insurance policy on me because of my position, and should anything happen, if anything should have happened to me while I was working for them, they would receive compensation, and that compensation they basically would be able to keep because the the work that I did that generated the finances and the money that they earned with me being there would cease to stop. So um, it is a very weird and unusual thing that if you haven't been in that position before, it can be odd when you see that there is an insurance policy on your life that you don't have access to the result should something happen to you or your family doesn't have access to it. In regards to both real and personal property insurance, then the insurable interest exists when the insured derives a monetary benefit from the preservation and the continued existence of the property. If we think of it another way, when a person has an insurable interest in a property, um, and should there be uh, a substantial financial loss from its destruction, then that's where property insurance comes in, and it's one of the most common insurances that is in existence that most people are aware of because, again, we have our um, property insurance for our automobile, we have insurance for our homes, we may take out insurance against other things that's property related that we would expect to gain something from if it were lost. The insurance contract itself, generally, uh, they are governed by the principles of contract law. The industry standards are heavily regulated by most states, and for the most part, any party that offers to purchase insurance by submitting an application to the insurance company um, are subject to the guidelines that the insurance company does establish because they can either accept or reject the application for the insurance to be put on the property. This is why oftentimes if you have an individual that's been in multiple accidents and totaled every car that they've had, there could be a point that your normal everyday insurance carriers will stop insuring that person. And some states have what used to be known as an SR29, which basically was an additional rider on a policy for someone that was a very high risk um, person to insure. And the premiums could be what most people would think were outrageous, but when these type policies were written, the expectation and almost expected that you're going to wind up paying off on the vehicle. So oftentimes the premium would be at a rate to where there would be a break even um, type of a deal if things were to happen. When we look at the effective date, oftentimes when insurance policies are written, you don't get the full copy of the actual insurance policy right away. It'll still go through underwriting and other things before the final version is available to you. But what happens is they will create a binder uh, for you. And the binder basically is saying that based on the information that we have and based on this date, we are putting in force coverage. And when the full policy is uh, effective, you will get a copy of the full policy and you'll keep it with you. And then that's your proof that you have the insurance. And when we think about this in automobile purchases, when you buy a car, you don't have to go right out then and get the insurance policy before you take possession of the vehicle. Oftentimes, simply the fact that you have a policy with an insurance company at the time you make a purchase and trade in your oath, and there is somewhat of a transfer over at that point in time until you actually make the call and transfer the information with your insurance company. And when they receive that call, then they will um, put a binder on the vehicle until it is officially written up and put in their system. Oftentimes, depending on the insurance company that you have and the relationship that you've had with them, um, the time between driving off the car lot and the time that you actually have to notify them for that new vehicle to be covered can be 7 to 14 days. I know with me with State Farm, I have 14 days to notify them of any change in vehicles that I have. But honestly, I usually call them the next business day and let them know that I've bought it so they can get it on there sooner than later. Because sometimes you just never know um, what could happen from one day to the next when you're driving a vehicle. There are co-insurance clauses, and often, if we think about fire insurance policies, property owners are going to insure their properties for less than the full value because most fires are not going to result in total losses, but um, it could. And usually, the fire insurance policies are also going to include a co-insurance clause. And a co-insurance clause basically provides that if the owner insures property up to a specified amount, usually 80% of its value, then he or she will receive and recover any losses up to the face amount of the policy. Co-insurance applies only in instances of partial loss, and the amount of that recovery is generally going to be calculated by a formula that the insurance companies are going to have. Interpreting the insurance contract when it comes to courts getting involved, the court recognizes that most people don't have the special training to fully understand the intricate terminology and that's involved in insurance policies. Therefore, when a dispute arises, the courts will interpret the words that are used in the insurance contracts according to their ordinary meaning in light of the nature of the coverage that was involved. Uh, when there is ambiguity within the contract, then the provision generally is interpreted against the insurance company. In other words, when it's clear language, a court could decide one way or another. But if it's so ambiguous that it's even questionable as to how it was written, then the court is always going to rule against your insurance company. Um, for cancellation, the insured can cancel a policy at any time, and so can the insurer cancel it based on certain circumstances. For example, talking about cars again, the insurer can cancel the um, automobile insurance for non-payment of the premiums, or they can suspend um, the the insurance policy if the driver's uh, permit has been suspended in any way because they're not supposed to be driving. Life and death policies can be canceled because of any false statement that have been made by the person being insured. A lot of times, this is why when you do a life and health policy, there could be um, a health questionnaire that's involved. There could also be um, a medical examination that's required to prove that you're in reasonably good health for the policy. Sometimes that's why the earlier in life you obtain a life insurance policy, the less likely you are to have to go through all the hoops. And you may get one for a much lower rate the younger that you are. The older we get, sometimes the insurance company is going to know that based on just general things in life, that if you're buying a life insurance policy at 60, the likelihood of that getting paid out within the next 5 to 20 years is greater than if you bought one at 20, where they might could collect premiums for 40 to 60 years kind of thing. So when it comes to duties and obligations of the parties involved with insurance companies, both parties to an insurance contract are responsible for the obligations that they assume under the contract. And in addition, um, both the insured and the insurer have an implied duty to act in good faith. Duties of the insured, that good faith does require that the parties applying for the insurance reveal everything necessary and be truthful. Um, they must include and disclose all material facts that are related, and then many insurance companies today will require an applicant to give company permission to access other information, and that could include your financial records, your medical records, and all those type of things in order to evaluate the risk and whether or not they will insure you. Um, Also, there is the obligation to make sure that the premiums are paid as they are stated in the contract. Um, Notifying the insurer within a reasonable time if any event occurs that could raise a claim, and then also to cooperate with the insurer during any investigation or litigation should it involve you and your insurance. When it comes to the duties of the insurer, once the insurer has accepted the risk and some event occurs that does give rise to a claim, the insurer has the duty to investigate and determine the facts. And when the policy provisions are against a third party claim, then the insurer is obligated to make reasonable efforts to settle that claim. When settlements cannot be reached regardless of the claim's merit, then the insurer has a duty to defend against any suit that might be brought against you as a part of that whole uh, part um, in the whole process. Bad faith actions. Again, this is where torts could come involved against the insurers. Thus, if an insurer is in bad faith and denies coverage of a claim, then the insured may recover in tort an amount exceeding the policy's limitations and may also recover punitive damages. And again, this is going to be determined by a court that an insurance company has acted in bad faith. When things happen and an insurance company has the ability to raise defenses that would be valid in any normal action based on the contract, um, it could um, involve the payment uh, during these periods. So if there's ever fraud or misrepresentation, if the insurance company can show that the policy was procured by any fraud or misrepresentation, then they have a valid defense for not paying on a claim. if there's lack of insurable interest. An absolute defense exists when the insurer can show that the insured lacked an insurable interest, thus rendering the policy void from the very beginning, which could also have the insurance company go back um, and there could be some money exchanging hands because their policy premiums may have been paid, but then again, it sometimes is going to wind up in court for this to happen. And if there were any illegal action of the insured, anything that was illegal against public policy could also give the insurance company the right to not pay out on something if there's ever a claim. The insurance companies can also be prevented or stopped from asserting some defenses that are usually available. For instance, an insurance company normally cannot escape payment on a death of the insured on the grounds that the person's age was stated incorrectly on the application. Also, the incontestability clause would prevent the insurer from asserting certain defenses. So that wraps up um, chapter 23. We'll go ahead and stop the recording at this point, and thank you.